So let me first thank Banco de la Reserva del Perú and the Rethinking Bretton Woods Committee for inviting me to participate in this panel, especially since I am not an expert on these issues. And precisely because of that, I will talk about not this secular stagnation or savings glut hypothesis themselves, but about what their implications could be for a country like Colombia or like Peru, which are emerging market commodity exporting countries. So as the previous speakers have mentioned, there are basically two main views about the world economy nowadays. One is the secular stagnation, shortage of safe assets view, sponsored by Somers and Caballero and Farhi. And the other is the BIS view. And first I will provide a small summary of these views. First, regarding the secular stagnation view, well, we have that due to demographic, distributional, international, or technological factors, we have now in the world an excess savings, an excess demand also for safe assets. And this creates a problem because policymakers cannot accommodate very low natural real interest rates due to the zero lower bound or other restrictions that we have talked about in the first session. As a result, we end up with insufficient aggregate demand, low growth, low inflation, low long-term interest rates, and in some cases, asset price overvaluation. The policy prescriptions from this view are very clear. On the fiscal side, they promote fiscal expansion, especially in infrastructure, as mentioned, and an increased supply of government safe assets. In terms of monetary policy, they suggest as much monetary policy expansion as possible, change your target, probably use a nominal GDP target, and greater coordination with the government. Perhaps, and they suggest this with less emphasis on independence of monetary policy. On the other hand, we have the BIS view, which I could characterize as a view of rotating financial imbalances through time and space. And the basic story here is that you have an overly loose monetary policy period that creates excess financial and expenditure buildups, which are not translated into higher inflation because of the globalization competitive pressures. After this boom period matures, you have then a financial bust that induces a decrease in both observed and potential growth. And as monetary policy attempts to maintain growth, it fits this expansionary policy into financial imbalances elsewhere. As a result, debt stocks mount, interest rates remain low, and financial stability risks build up through this risk-taking channel, and the cycle repeats itself. So you have this rotating financial imbalance going on. Their policy prescriptions are also well known. On the monetary policy side, they say, okay, you have to stop overburdening monetary policy to restore growth. You have to preserve central bank independence, and you have to use monetary policy to lean against financial excesses. On the fiscal side, they say, okay, you first have to avoid these feedback loops involving financial and fiscal fragility through the asset side on the bank's balance sheets. You have to maintain sufficient fiscal space to deal with future financial stress, and you have to structurally reduce incentives for debt issuance and moral hazard. They add, and they have this new side, a strong emphasis on prudential policy. They say, okay, you have to have a clear prudential policy framework which must be geared toward preventing financial excesses, and they place a lot of emphasis on capital and liquidity buffers. So what are the key highlights from these two views for us, for countries like Colombia, Peru, even Chile? I divided the highlights into macroeconomic highlights and policy highlights. Regarding the macroeconomic highlights, I will say first, both views predict low growth, low real interest rates, and low commodity prices for a prolonged period. This is perhaps the most important implication for us. Second, financial risks and volatility are perhaps more likely in the BIS deleveraging, rotating imbalances view than in the secular stagnation, more subdued aggregate expenditure world. Also, inflation is more likely to re-emerge in the BIS view as balance sheets are repaired, since in their view the slowdown in productivity is more related to the supply side than to the demand side, because they say this debt build-up produces a resource misallocation during these episodes. Accordingly, the BIS view will say that interest rates are more likely to increase under this diagnosis. Regarding the policy highlights, both views reduce the relative importance of inflation as a central bank policy objective. The secular stagnation view emphasizes growth, while the BIS advocates using monetary policy to lean against financial excesses. Fiscal prudence is recommended in the BIS view, while fiscal activism is encouraged in the secular stagnation view. And whereas central bank independence is supported and the risk of fiscal dominance is highlighted in the BIS view, policy coordination or less emphasis on central bank independence is supported in the secular stagnation view. Well, with all these things, what are the implications for us, for a country like Colombia, or for a country like Peru, which are emerging market commodity exporting economies? And I will talk about the implications on three areas. First, the policy response to the external shocks. Second, volatility. And third, institutional or political economy issues. Regarding the first area, the policy responses to cyclical or permanent external shocks, the first highlight that I mentioned is clear to suggest that we have low global growth and low commodity prices for years ahead, and therefore this implies a lower path of national income for our countries than in the past decade. As a result, we need a permanent adjustment in domestic absorption and the real exchange rate. That is required if we believe those implications of both views. The problem, or one risk, is that with low interest rates, low external interest rates, and available external funding, there is a temptation to delay this adjustment or to respond with probably inadequate counter-cyclical measures today. And we face that in our policy discussions, at least in Colombia. As a result, we have an increased external, fiscal, and financial vulnerability if we do not follow the inadequate policy response. And the realization of these risks is likelier under the BIS view, which, as I said, provides for eventually rising inflation and monetary policy tightening in advanced economies. Also, regarding the policy responses in our economies, there is another risk that comes from the lack of fiscal adjustment if it happens, and simultaneously low external interest rates and available external funding. In those circumstances, we could have a currency misalignment, basically an undue overvaluation of our currencies. And then the temptation is to use capital controls or macroprudential measures that in those cases could seem justified. But in reality, they are no substitute for necessary fiscal adjustment. And I'm talking from experience. We have exactly that situation in the 90s in Colombia. In those years, we have a huge fiscal expansion, large capital inflows, and the talk was about capital inflows and overvaluation, not about fiscal consolidation. So the risk is that policy discussion and the focus of policy deviate from first-order considerations. The second area of the implications for emerging market commodity exporting economies is volatility. This as was explained by Professor Hernando, and it is clear from all the discussion, uncertainty is increasing, and the external context in which our economies operate is becoming more volatile. That probably is going to be more volatile under the BIS view that predicts these boom and busts of financial boom busts across the world, and probably because an eventual monetary tightening in advanced economies. And it is not difficult to see this. Just look at what happens since September 2015 till today. We have had like 3 large episodes of currency over depreciation or appreciation, movements in the long-term interest rates. The latest of that was the response, a very curious response of the long-term interest rates in some of emerging economies that were pushed down, which leads you to think whether we are now a new source of a safe asset or whether this is just a speculative phenomenon in a very uncertain and volatile context. Well, for us policymakers in these countries, the natural question is how to deal with this volatility, and in particular whether exchange rate flexibility, the exchange rate is a valid shock absorber. If you follow the BIS view, they will tell you, well, probably not, because if you have a long enough over appreciation of your currency, then you will have risk-taking channel going on, since your collateral is appreciates, and then you will have an over indebtedness and further appreciation of your currency. But then from the policy point of view, the question is whether there is a better alternative. And here I am not sure. In some countries, probably not here in Peru, but definitely in Colombia, sterilized FX intervention has not been very effective, and capital controls probably are not very effective. Besides, they have undesirable side effects like crowding out small firms from credit, hidden risk build-up, etc. And even if those things were effective, then there is the issue of whether the stabilization of the exchange rate could induce currency mismatches that then will create even more serious risks on financial stability. And finally, the third area in which I can identify some implications of this discussion of secular stagnation and the BIS view on us is regarding the institutional and political economy in our countries. From experience, I will say that vulnerability, the institutional strength is fundamental. In Colombia, and I know in Peru and in Chile, we have credible fiscal rules, we have central bank independence, and I think it's key to preserve this thing. And in that regard, fiscal activism in advanced economies, especially under the secular stagnation view, does not help to muster political support for prudence in our economies. People just say, okay, look at what is going on in advanced economies. They are pushing for a fiscal expansion. Why don't we do the same here if we are now facing lower growth rates than in the past decade? Also, after an episode of overshooting inflation targets in the countries of the Pacific Rim in South America, central bank credibility may have deteriorated. And in this context, these paradigm shifts in advanced economies, reducing the importance of central bank inflation objectives or weakening the argument for central bank independence, do not help either. So in conclusion, I will say that the secular stagnation and BIS views of the world economy provide forecasts and policy recommendations that definitely influence policy responses in emerging market commodity exporting countries. There are common themes in these views, especially in terms of the forecasts, that point to the adequacy of prudent macro policy responses in our countries, and these responses may well not be counter-cyclical. Therefore, a relevant risk in this context is the lack of adequate policy responses in an environment of low interest rates and risk-on episodes in the world economy. And the wider policy discussions surrounding these views, the BIS views, and the secular stagnation views could influence our own policy discussions. And in this regard, it is important to frame those discussions in the context of the state and the shocks of our own economies, since those policy prescriptions may not suit them completely. Thank you.